Shopify stock is down 25% over the past week after the company reported first quarter earnings. At the latest price, the company is now worth $74.7 billion. Account for cash, investments and debt, and the enterprise value is just over $67 billion. Revenue over the last 12 months comes to $7.4 billion. Net income is negative $200 million and free cash flow is positive $1 billion. So Shopify stock is now valued at 9 times revenue and 64 times free cash flow. On its face, Shopify's Q1 earnings look fine. Revenue grew 23%, which was above analyst estimates, and guidance for high teens growth next quarter is more than acceptable, especially since that number includes a 3 or 4% hit from the sale of Shopify's logistics business. Even so, the recent sell-off makes sense because it highlights the main concern about Shopify's stock. Heading into earnings, Shopify was trading at over 10 times revenue and 20 times gross profit. That valuation is in line with some of the fastest growing and most expensive stocks on the market. But Shopify's growth rates, although strong, are slowing down. Perhaps more importantly, the company is seeing pressure on gross margins. Management said that gross margins would decline again next quarter by about 50 basis points. But the reason for that isn't necessarily higher costs. A large chunk of Shopify's revenue comes from its lower margin payments business, ShopPay. So as the payment segment grows, and it is growing rather fast, Shopify's overall gross margins decline. That being said, Shopify remains an impressive company that continues to add both small and large businesses to its platform. Recent big customers include Coach and Overstock. There's also Red Bull, Allbirds and Tesla merch. Total gross merchandise value has increased from $61 billion in 2019 to over $230 billion today. Management said that Shopify Pay is the highest converting accelerated checkout, and it's impossible to argue with a 56% increase in volume. So the case for Shopify really comes down to valuation. After all, it's worth noting that since the end of 2019, Shopify's stock is up only 48%, while the Nasdaq 100 is up 114%. A lot of that comes down to the valuation of the stock. So to value Shopify, I've assumed the company can grow its annual revenues 16% per year for the next 10 years, while gradually building to a free cash flow margin of 25%. Using a terminal growth rate of 2.5% and a discount rate of 10%, I think Shopify could potentially generate a 9.5% annualized return based on this model. Considering the strength of the Shopify business, operating leverage, and the potential to outperform these projections, I think the stock is moving close to an entry point, and I rate the stock a cautious buy. But these are my personal opinions, not financial advice, and I hold no position in Shopify stock. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.